Today is the 14th of August, 2010, and this is the SPY chart, or that of the S&P 500, and it is a 30-minute high-low line chart. And I'm not going to talk too much about the technicals. I'll talk about a little bit. However, if you want to know more on the technicals, I would recommend to check out the link in the more information box, which was made by Shannon. Excellent, excellent video. And what I like about Shannon's approach is he is probably the most unbiased person that I have seen do these sort of things. The only biasness that I see Mr. Shannon have is, well, it's a horrible downtrend or a beautiful uptrend, and that's it. You go on CNBC, well, they claim to be unbiased, but you know that's not the case. It's fairly obvious that they are very, very biased. Whether they think they are or not, that would be a totally different question. And therefore, we have seen this move of big selling this last week. And now this has to give us a little reason for concern, as I think the approximate or a pullback that you would have liked to seen would have been one down to about 111 or so, and it went nicely below that, or horribly below that. Depends on how your take on the market happens to be. And there's a lot of people who are holding 401k plans, long-term investments, whether it be through SPY, and it's very difficult to just go through this market and expect to get all of these magnificent results when volatility can come at a blink of an eye. We've seen it on the May 6th flash crash, as they call it. I call it the conspiracy lows. It's a conspiracy game. And the market makers itself, that's, to me, the biggest turnoff that I have seen within this equity market, is how the market makers make this game work, how they don't inform us how it's a method of gambling. And I've had many, many people come on stating, well, you know what? It is not gambling. You work hard, you can win. I never said that gambling meant you lose or that you were going to lose. I just go with the definition of gambling, which is based on an uncertain outcome. And thus, if you are skillful enough, you might make your long-term advantage towards the positive. But it would still be a form of calculated gambling. And I think the reason why they don't want to tell you that it's gambling is because the amount of people that would not participate. For the same powers that be that are stating, well, it's a form of investing. You go to Scottrade. I don't remember which firm it was, but there's one slogan that's like, get invested. I don't know if it's Scottrade. I know it's not TD Ameritrade, but one of them has that slogan. It's not get gambling. No, they don't want to say that. Yet you are seeing the same people stating, oh, don't bet on sports. That's gambling. That is reckless behavior. And the sad truth is many people who are playing this game are playing very, very recklessly and losing a lot of money. Therefore, if you're playing with any type of long-term plan, or you're trading and you're maybe not doing so well, the big situation is to become educated within the system. And I want to focus more towards the long-term traders. For if you are a short-term trader, I'll leave it up to yourself to determine how you're going to manage your risk versus reward. But if you're playing long-term, we're seeing the year-to-date chart. This thing was up to well over 150 at one point, and it was down to as low as 66 from the 2007 high and the 2009 low. And also, if you take a look at the last decade, we are stuck right in the middle of this big range that it has been trading within. I do many silver videos. I talk about the range in which we are in right now with silver for the last year or so. well, the broad markets have been in this range for a decade now. And my personal feeling, my personal guess, and it's a guess, it might be a calculated guess, but it's a guess, is that it is going to head significantly lower over the next 16 months or so. I do think hyperinflation will kick in afterwards, which would mean maybe Dow Jones 50 or 70,000. And that would be even more scary than Dow Jones 4 or 5,000, as the prices for many different items would just be exceptionally high. So therefore, if you're investing long term, have ways of exit strategy. Remember, the Federal Reserve talks about exit strategy? If you are trading within the market, whether you are a long-term trader and even day traders, you would want to come up with some sort of exit strategy. And that's based on the fundamentals. And I say that for day traders as in, well, how long is this system going to last? Because where you are placing your bets is within financial institutions. And these financials, they're not doing so well. And it makes it even that much more riskier. And the reason why the trading is such a major turnoff is because of who controls the system. So understand where you can have stop losses, understand different methods of protection, aka option puts, or a diversified portfolio. If you're listening to CNBC and Jim Cramer on Mad Money, and he talks about, well, you want a diversified portfolio, you want maybe something in healthcare, you want something in a financial institution, you might want a non-cyclical, and you go through like 5, 6, 7 different industries. That is not diversified. We have seen how all stocks can go down together. Diversification means different types of asset classes which are not forms of stocks. Or at least getting really fancy. Like I say, option puts, different types of leveraged ETF shorts. That would be a different form of diversification. Anyway, as far as this chart is concerned, on the 50-day moving average, it was a level of resistance back in May after the flash crash for conspiracy lows. It managed to get back up to that level in July, find resistance, get above it, and since then it made a little bit of a move and then has now came right back down to the 50-day moving average, and it is trading barely below it right now. And if that's the case, and this means a fast move and failed move could be from this breakout. And from the length of this this failed move, if it is a failed move, most likely a test down towards this 100 level seems as if is very inevitable within this market. This VWAP was a level of support in here. It's been a level of support again. The more often support is tested, the more often it has, or the better chance it has of being taken down. And if it does get taken down, you can usually expect a fast move, maybe about 4 basis points, 4%. And then maybe you might want to come back and find the resistance at that level, or a lot of times it will do that. Doesn't always happen, but more often than not, key levels of support when broken would become resistance and vice versa. For if you are expecting that to happen every time, then people are still waiting to buy the Dow at 1,000. And I say that because 1,000 was major resistance on the Dow for many years and decades. When it finally broke it, it never did come back and test that level as support. So that was one of the rare few times that it has actually occurred where it didn't happen, where support becomes resistance or vice versa. However, when we had 66 SPY as a low back in 2009, we have an economy the way that it is right now. I really don't see how this is going to work out in favor of the long participants, other than through inflation. But even at that point, the buying power for the majority of people is just not going to cut it. For example, if the Dow Jones does go to 50,000, that would be about a 400% increase. I could make a calculated guess that the rate of inflation would be much greater than that, where you would absolutely be losing on the play. You'd be doing better than holding money under the mattress, which is most likely even a worse play. So therefore, I'm going to end the video at that. Remember, if you are looking to find more on the technicals within the S&P 500, the Russell 2000, and a few other ETFs, please check out the video in the more information box. Thank you so much for watching, and have yourself a magnificent weekend.